name is İpek Özkaya. I work at the Software Engineering Institute, Carnegie Mellon. I'm one of the guest editors of IEEE Software Magazine's special issue on technical debt. Today I will be talking to Jeromy Carriere, Chief Architect at X.Commerce, an eBay company. And we'll be talking to Jeromy about his experience with technical debt. Prior to joining eBay, Jeromy has served in leadership roles as Chief Architect and Vice President of Architecture in Vistaprint and Fidelity Investments. Under his sleeve, Jeromy also has experience with establishing a successful startup, Quack.com, which was acquired by America Online in 2000. Thanks a lot for your time, Jeromy. You have worked in several organizations leading their architecting and development efforts. Is technical debt a useful metaphor? Are developers and software engineers generally aware of technical debt in your experience?
So in my experience, the metaphor is, it mostly works. At the very least, the concept provides a convenient analogy that's relatively easy to explain. Engineers, managers, everybody nods kind of at the explanation. So there's a clear resonance. And generally now when I talk to companies, I find that at the very least engineers are familiar with the concept. So it certainly has taken hold as a metaphor across the industry in my experience.
So when you work with your teams, are they aware of technical debt as a metaphor as technical debt, or does it surface more in terms of maintainability or evolution issues? So does the metaphor actually help uncover some of these hidden concerns?
It does. So engineers, first of all, I think the superficial kind of intuitive appreciation of technical debt really is derived from engineers' experience in maintainability. So the overall trade-off that gets made between velocity and quality in general, broad terms, that's what engineers generally gravitate towards when you say technical debt. I've actually tried to spend some time formalizing the concept to talk about the really explicit gap between desired quality in broad terms, so dimensions from scalability, operability, maintainability, flexibility, and existing actual quality of a system, and treat that gap as sort of the principle in the debt principle, and then understand interest as the sort of the carrying cost of that debt. What's the ongoing impact, financial impact on an organization to bear a given component, let's say, of technical debt. So that degree of explicitness, I believe, is very useful in helping an organization manage technical debt as an actual thing.
Mm-hmm. So you bring up an interesting concept with the financial impact. So is technical debt like debt in real life? Like, can it be measured in terms of dollars or other financial measures? And is it really a debt incurred by the organization similar to other kinds of debt incurred throughout the running operating costs and so on? So how does that map in terms of the financial terms?
Yeah, I believe that it can be. I believe that you can use technical debt as a framework to manage it exactly as you would, or almost not exactly as too generous. Manage similarly to the way you would manage a portfolio of financial debt. So the financial cost of technical debt, the interest, by analogy, the interest of carrying a given technical debt can be measured by the increased cost to maintain, the increased cost to operate, the increased cost to scale. Those are all reducible to dollars. Those are all reducible to financial measures. Some of them are harder to measure than others, but I'm fond of the you can measure anything mantra. So I believe that yes, you can reduce it to a financial measure. Where the analogy breaks down very clearly in my mind is interest itself. So in a financial instrument, financial debt, interest will generally be stable, right? You will have predictability of changes in interest rate. Whether you have a fixed rate mortgage or a variable rate mortgage, you know roughly what the rate is going to be at a given point in time. That isn't true with, in the analogy with technical debt, because the carrying cost of a given quality gap, a given technical debt, can arbitrarily change over time as the surrounding system context changes or the surrounding business context changes. So it gets a little bit dangerous as an analogy at that point, but I think, again, it's still a very useful potential framework.
I think you bring up an important point in terms of where it breaks and where it actually can be helpful. And to push that a little bit further, do you think there are repeatable, quantifiable engineering practices that all organizations can follow to manage technical debt? Has technical debt now, with the popularization it has enjoyed in the past couple of years especially, become a software engineering concept with practices that we can suggest to development teams?
I believe so. There's obviously, as you well know, a significant gap in the actual practice here. But I do believe that there are practices that I'd hesitate to say all organizations can follow, but I believe that there are at least some simple techniques that can deliver significant benefit to organizations. I'll jump into kind of what we've done at X.Commerce, although our adoption hasn't been uniformly at a high level. The way we've approached it is by adding into our Scrum process an explicit responsibility for the tech lead at the end of a sprint to capture technical debt that was incurred during that sprint, and capturing it in Jira, our ticketing work tracking system, just as you would capture any bug or feature request. So that way, when we begin a sprint planning exercise, we can look at our backlog of debt and decide the relative value in paying off that debt versus adding a feature or fixing a true functional bug. That, of course, demands a level of rigor in estimating the interest analog for the technical debt, but it is generally a fairly simple technique that people can apply in at least within the context of an agile process.
So in the Jira backlog, you actually have a specific item that can be tagged as technical debt as opposed to any maintainability issue. Am I understanding that correctly?
Yeah, I would actually characterize maintainability issues in general as technical debt. So I would, but yes, we do have a Jira ticket type that captures technical debt, and it has a couple of specific custom fields in Jira that allow us to, again, characterize the risk associated with the debt, the interest rate associated with the debt, the principal, the payoff cost, what it will cost to actually close the quality gap. So those are the kinds of mechanisms that we're working to employ.
So in pushing that a little bit further, what point in the life cycle is typically debt incurred and elicited? Like, is it captured during the time that an engineer might be making a particular decision and think that might turn into technical debt? Or is it mostly after the fact that is recognition that, well, there's actually an ongoing added interest with, as you suggested, maintainability, scalability, and operation costs that we might need to refactor and rework down the line?
So it's all of the above. So in my experience at least, so I would love to be at the point where every engineer had both the skills and the motivation to actually capture technical debt as it's incurred. That explicit consideration is really, in my mind, the most critical opportunity that we have. But that comes with a fair degree of education and experience. So in lieu of a universal kind of adoption at the individual engineer level, we've given the tech lead within a given sprint team the explicit responsibility, because in general they will know what their sprint team is working on and how they're executing within the context of the sprint. We've given them the responsibility to capture the debt incurred during that sprint at the end of the sprint. Again, I would love to get to the point where every engineer is both capable of and motivated to capture that in the moment.
Mm-hmm. It also comes down to the incentives, and it's obvious that having an owner, in this case, like the tech lead, and having also, in a way, categorizing it makes it easier for engineers to recognize and not to really hide it under. I think that's also part of the thing that we see in some organizations. It's a bad thing to really recognize technical debt because of the added cost of the rework that comes with it.
Yeah, exactly right. Exactly right.
Well, Jeromy, we appreciate your time. Thanks a lot. And we'll be watching any new practices that might come up and might chat with you further down the line.
Excellent. Well, thank you very much.